Good evening. I'm Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of Monday, the 20th of November, 2023. Now, a couple of things. I didn't do an update for you over the weekend. I had other events take place in my life, family, and things that I had to take care of. Sorry about it, but it is free. My paid subscribers got all their videos, did everything that I should do, and I'm loyal to them immensely. I'm not loyal to you, but you're not paying me to do this, and they are. It's like going to your doctor. Yeah, John, I'll be happy to talk to you, blah, blah. It doesn't necessarily charge you. On the other hand, go in and see him, you're going to get the lab charges and everything else. Same thing with me. It's an analogy and no more. I do intend on putting out updates tomorrow. I'm not certain about Wednesday night. I have to travel, and I haven't decided what time I'm going to leave. I'll be gone Thursday like everybody, but I am coming back Friday. Now, will I put out the Friday morning video? I don't know yet. Just an honest answer. I don't know yet. I may miss that, but I will be putting out over the weekend edition. So had to catch up. I had been out of town the week before, just about a week and a half ago now. So I'm caught up with all my traveling, but I can't help when you get family coming and you don't see them for a long time and you want to see them. All right, what a week for OpenAI. Wow. And the drama's not over. I now understand upwards of 700 of the employees have signed the paper that if the board isn't out, they're out. And I imagine that with open arms, most of those people will be employed instantly at Microsoft. And what does that do for OpenAI? Because between ChatGPT and this, that's it. Those are the market share leaders in the market, but Microsoft stands to benefit the biggest. They latched on instantly, smartly, and they'll run with it. And those people are probably better off in an environment that embraces what they're doing. And the whole idea here that started this, and people are lost in it, is what responsibility do you have as a company with artificial intelligence? It's a big, broad question. I'm certainly not going to get into it here, but it came to a head with this company, and you have the board thinking one way, you had the CEO and the other founder thinking a different way. They don't get along. They're brilliant people, the two that created the company, and with open arms, Microsoft got them. I don't know what the pay structure is. I don't know how they'd be paid, but it won't be little. It will be a lot. It could be stock options. It could be many different ways that they get reimbursed. But this is, again, cutting edge. You're at the beginning of something. Do you remember when people said Microsoft is over and dead? They can't reinvent. That's it. Gates went into his whatever he did, and that was the end of that. Well, that's not the fact, okay? This is a monster company with great products and pricing power. And I have, for one, been telling you that for a long time, and it's come to light. Now, another thing that's going on, this is the time where, if you'll remember, I said that the S&P normally rallies from the 26th of October right into the beginning of December. I'm not giving you the exact date by design. And today was the day where the market typically kicks in with not the same high percentage trade, but very close for the NASDAQ and the Dow. Again, I won't give you here the dates you come out or where you do that. My subscribers, my paid subscribers get that from me, but I'd like you to support their positions. How's that? All right. So Microsoft up another $8 on this news. Whoa, unbelievable. Rivian, all right, they're moving some people around within the company. Most of the auto stocks did a little bit better, and they're in part doing better because they realize they're not going to just jump into EVs with both feet and do away with their internal combustion engine. I make a prediction. It's going to be a very long time before gas stations are gone that give you petrol, period. They're going to be around a very long time. They have yet to embrace the idea of putting in, at least in Chicago, I don't know any service stations in Chicago for gasoline that also have electronic chargers. I see it in CVS. I see it in Walgreens. Some of the food places that you go to, I'm talking the grocery stores, they have a few stalls. The hospitals have a few stalls where you go in and you can charge your car. But if you're telling me, and I live in a big city of Chicago, that everywhere there's a charging station, there aren't. I don't know if in Chicago, I don't own an electric car, but I would see it. I have never seen in my neighborhood, and I live right by downtown Chicago. I mean, I can walk to the Board of Trade. I have never seen a charging station. I see them in buildings, but not a series of them set up. So we're still not there, and that's the important thing to remember. Now, I'm starting to look at Zoom. Zoom's earnings came out. The stock went up. It sold off afterwards, not down, but lost some of the gain. But I'm liking what I see. Number one, this is a huge company. Who doesn't use Zoom? I use it. I haven't done a lot of the webinars that I normally do because I'm redoing my charting course. And as I'm doing that, I'm taking the time on something that I'm doing with that, and then I will start these. So in December, I'll probably have one more webinar, and then we'll really kick them off next year, 2024, as I'll start to do them a bit more. But I use Zoom for many things. Certainly, I use it probably every week in an office meeting, either with my staff or with other people. People are always making a sales pitch, and it's Zoom, Zoom, Zoom. So with that in mind, here's Zoom. Zoom. All right. So the market has just, I want to use this word careful and spell it, J-U-S-T, broken this downtrend. It just happened. It happened when you crossed, for me at least, right here. So it's maybe a week and a half old, if that. The pattern is bullish, higher lows, higher highs, just occurred. Number two, market held and fought at what do I call the red line? It's the 18-day average, but what do I call it? The line in the sand, the demarcation point. As I've already done the moving average, some of the moving averages for my new course. I'm labeling it that for everybody and showing people what to use. On my new course, and it'll be ready, I'm hoping by Christmas. I got fingers crossed. I got to throw a lot of time at it starting tomorrow. Again, I took a day off today, but I'm looking for that. I'm dropping the 45-day average on futures and just going with the 50. So it's going to be the main averages, the 100, the 200, the 50. I was using the 45 in futures. I'm moving to the 50, but I'm sticking with the 18. It fits beautifully into stocks and the futures markets. And I believe it is the line in the sand. Markets that are down a lot often come back, fight a battle to determine the next move, either continuation or not. It's a phenomenal stall point. You come down, tell me you don't go up there to fight your battle to see what you got. You're going to see this over and over and over. Here, you were down. You came back up, cleared everything, went and then fought your battle. Went up, fought your battle a little bit, and then came back down. That's what I expect out of that average. Bollinger Bands. Again, you only stay 5% of the time over or under a Bollinger Band. It doesn't have to be in succession. It can be where you do that. But overall, that's all you're going to spend out of it. If you step back here, you can see this. It happens regularly. So would I tell clients, for example, to reach up and buy the market over a band? No, I'm expecting a pullback if they're going to buy it. And I'm always looking at day-to-day activity to see, do I want to own it either weekly or daily? In this chart, it is bullish. But again, it's over the upper Bollinger Band. Where might the market want to go to encounter the first real major resistance? This is resistance, but the bigger is the 200 and the 100. 67.11, the 100, 200-day average, 68.09. And you're overbought. Not even trying to embed. So I can see why after the report, the earnings, you jumped, then you sold back. You're over that band, and traders see that like I do, if they understand how to work with it. Not everybody does. In fact, I'd say the majority have no idea when I talk Bollinger Bands, the importance of them. Rivian, you want to see something. This is so important. Is this a top or is it basing out for another move? My instinct is it's a base for a move. Why? To the upside. Because you've come down. And all of a sudden, the overall momentum of the market has gone sideways again. It tried a small amount of this over here, and then it fell one more time. Could that happen again? Of course it could happen. Do I think it will? No. Why? Earnings, real money that the company's making. And each time I look, they're getting their car production out. There's more of them on the streets. I'm seeing the trucks. I'm seeing and I'm talking not only Amazon, I'm seeing their SUVs and their trucks and all on the streets of Chicago, and they're rather popular. I think they're made in Normal, Illinois, so it's not too far away from here. But, by the way, not too far away is ours. But you can see what I'm getting at. Sideways action. Next move could carry this market up towards the 1798 to 1810 area, the combination of the 200-day and the Bollinger Band. You stay churning. If you get underneath 1593, you might get back to 1516. But I think the bulls have the edge right now. In the gasoline fund, I think you bottomed out at the Bollinger Band. In fact, I think it was here. It went back up to, again, that line in the sand, that demarcation point fought, came back. It's not out of it. It's still there. Okay, so we have to pay attention to what it's doing. Is it trying to base out? Well, November 26th is the OPEC meeting. You cracked $80 a barrel. That could not make the Saudis happy. Therefore, I would assume Saudi Arabia has a very big decision. They are the big swing producer, and they've got the 1 million barrels a day. At a minimum, I want to use this word, minimum, I expect them to keep to the 1 million barrels going well into 2024. The question is, do they put pressure on others to cut production as well? Could they cut more? Well, they could, but every time they do that, somebody else is going to produce more. Right now, I think it's the UAE. It's either Kuwait or the UAE has a dispensation as of January 1st for another 160 barrels a day. So that's going to come on to the market finally. So there are parts. I just forgot which one of the two it is. And in Kuwait, their refinery comes back online. They have been offline for a short while here. They had a problem at the refinery. The fuel feed went bad. Plant didn't blow up, thank God. But now they're coming back online, so they'll be consuming a little bit more too and producing product. That's what refineries do. And XLF, fully embedded reading. And this thing just keeps churning higher and higher. I don't see a spot to enter it is the problem, and it's getting more bullish. What? Look at the 18-day average in the 200. You're about to get a bullish crossover, and you might even get it over the 100. If you do, you realize how bullish that is when the short-term average, the shortest term, the 18, gets over a 100 and a 200. I mean, that's just a massive bullish situation in moving averages. This market, that looks like the gift of gifts at the beginning of the month, end of October, and boom, the market just ran with it. In XLI, and by the way, it ran with it as interest rates fell. They didn't go higher. Remember, that's so important. The higher they went, the financial services were under stress. It's made up of lending, the power to lend, the interest rates too high, hurting companies, debts not be able to pay, commercial real estate. I can go on and on what it's all made out of. Read what that does. XLI. Well, you're fighting a huge battle at the 100-day average. You're embedded. I don't see why you don't go for the upper Bollinger Band still. This runs the day. Whenever you're embedded, that's the power. Walmart never did come back. So this was not a fluke. Its earnings report and the guidance, it has not come back. Are they telling us that Black Friday is not going to be a good sales opportunity for them? Because this market's not even bouncing. Be very careful right here. RSPD, is the consumer going to buy or not? Well, we're about to find out. The trade, the associations of retail trade have come out and they are saying that they think that the consumer is going to front load himself to buy his gifts on Black Friday and Cyber Monday. I hope you do too, because I'm going to have that offering where you get my courses for free. So you might want to take a big hard look at that. But as you can see right here, you're embedded. You're coming up to that resistance. We're going to know a lot in about 6 days, 7 days when we hear how Black Friday and Cyber Monday went. In the home builders, I'm just bullish. Each day I'm looking, interest rates are falling. We have pent-up demand. These guys have forward bought. Remember, you can go in if interest rates, let's say 8%. They can take some of their profit. You can take some of your money, and you buy down the mortgage to get a 5% for a year and a half, whatever. There's many ways to do this. And then you're hoping to refinance while you're paying that 5%, and it's not 8%, it's 7.5%, 7%, whatever it's going to fall to the mortgages, and you play that game. And sometimes the builders even say, every time you refinance, just send me the bill, I'll work with you on that, or I'll pay it. There's just many ways. There is no set thing. I've seen this, been through this. In my youth, I was buying and selling property, and I went through these cycles, and I know how they work. Took advantage of them. In XLE, lower highs, lower lows. Here's your big battleground, 84.70. Big resistance, though, in energy. The 100-day average, 87.14 to 87.38. To get through that, you're going to have an OPEC surprise. I don't know what that's going to be. On the downside, this, unless you can get away from this, you could fail again real easy and go back to the 82 level here, so be careful. In the gold market, how often do you hear me say the markets fight for direction at the 18-day average of closes? You don't think that's going on? When we fell down here, I said, this is where to you, I thought the pros would cover shorts. We had a downtrend. Now the market's fighting for an uptrend. If the market can pop out of here and take out today's high without then getting back under today's low, you do open the door for the 186.40 area. So I'll be looking up there to see if it can get up into that area. In SLV now, I'm looking for, on the way back down, the support between the 200 to 100 and the 18-day average. I think it did its thing. It got to the upper Bollinger Band, and I think the pro money realized I just got from 2010 all the way up to 22. That's a big move. It's 10% move, just about. Out they go, and that's what I think happened there. In copper, you're at the mercy of what China does now in its property market, but it's looking good, not bad. It is overbought. You're at a resistance zone, and no, I wouldn't be telling my clients to buy Bollinger Bands to get up here. Could it get there? Of course it could. Do I think it is? No, not just yet. But I think that we've seen that the 31.71 level might be the low for the near term, period. Might be in already. In TLT, every auction that the government's doing, we are seeing they're well received, number one, and yields are coming down, number two. And that keeps TLT and BND going higher. In the dollar, you continue to leak away. You might be going to 29.08 here. You're oversold. This is the gorilla glue trade. What do I mean by that? It's when the market latches on to the Bollinger Band and just sticks with it. People will go, oh, it's not going to stay there. Wrong. It's called the gorilla glue. Until you break the bond between the two, you just keep moving it. And if you get an embedded reading, it gets even worse. So the dollar is definitively in the bear camp. I'm looking for bounces in the market, but I think they'll be sold. And that flip-flop is true in the FXE. Gorilla glue trade to the upside, but here it's embedded. So the breaks in this market get good breaks, and I think like at 99.66, the pros will be looking hard to be a buyer against that number in the market. You put it all together, you try to come up with a game plan, and I have one for you. You know you're going to get the cyber events taking place. You're going to get the Black Friday and the Cyber Monday. Actually, it's a Cyber Week event that I'm going to do. But in the meantime, you can choose from these offers. Do yourself a favor. Get our QT price counts. You might also want to get our Q2 platform. Why? This platform is where you can create your own price counts. And yes, I have a course about it. It's free. Talk to my brokers, 866-973-2077. They can help you. And by the way, a lot of my brokers are leaving on vacation starting tomorrow. They'll work remotely, but people go away. This is a big holiday in America, and people go with their family, and a lot of our people are out of town. I'll be out of town for 48 hours, but I'll have my computer with me and working. So That's what I'm thinking. How do you get this all? And you can choose. There's about 10, 11 of these. Move your cursor to the top. There'll be an icon, or go to iraepstein.com. Free offers. Pretty simple. I'm Ira. I'll see you tomorrow morning. You have a good day.